So why didn't we panic this morning? Why did I say stay the course? First, I assessed what kind of sell-off this is. Do we have a problem that's systemic, meaning there's actual weakness in a rot in our institutions that can't easily be undone? Now, my partner David Faber and I discussed this very point this morning. We agreed that we needed to take the financial crisis scenario off the table because our institutions are strong. And we don't believe that the whole economic system is in jeopardy. We don't believe that major banks will fail. We definitely don't like the situation, for heaven's sake, and it's likely we're headed for recession because of the president's ill-advised plans. But we'll pull out of it one way or another. It's not going to be the global financial crisis #2. And that's important because if you look at the 15% downturns we've experienced in the last 4 years, the vast majority of times you had to buy, not sell. Normally, when we're down 15%, we actually have seen the worst of it, or the market becomes viable again, unless it's systemic problems like the financial crisis. You have to assume that, yes, indeed, the worst may indeed be behind us. Second, you had to assess the proximate cause of what happened. In 2007, it was the massive leverage in the system affected a huge number of financial institutions. Now, but looking back at most 15% declines, the proximate causes were usually because the Federal Reserve tightened too much or there was a one-off event that eventually resolved itself. Right now, we're clearly looking at a one-off event, the president's decision to enact shockingly high, perhaps, let's just say, even dangerous high tariffs. As long as the tariffs stick, our economy is in real trouble. But it looks like the president doesn't care. He should always care, both short and long term. That's part of his job. That said, the stock market almost always bottoms before the economic indicators like employment, industrial production, GDP growth. Before they start rebounding, the market bottoms. I want to thank Michael Semblis, the unbelievably good strategist, J.P. Morgan, who actually pointed that out in a remarkable talk that was also had some humor to it that he gave today. He noted that the administration lacked rationality in the way it went about this very suboptimal plan. And while it hurt the economy, it's not the beginning of a nuclear spring. Thank heavens.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.